laggards that are just reporting the financial information, they're not doing much on ESG. Those that are starting to say, you know, ESG and the financial results are coming together, higher returns are achieved. We're seeing where companies actually bring ESG, it's resulting in positive financial results. So we're genuinely seeing that happening. But I would say that most Australians are still down at the left-hand side of the page there, around the laggards becoming intermediate. There's still a long way to go. So what are the trends we're seeing in Australia? I mentioned mixed scorecard on ESG. We don't follow any mandated standards. I mentioned before, there's double materiality. There's who are the people, who are the stakeholders, you know? And so I've seen some reports that are 350 pages long. I've seen some reports that are 10 pages long. We're not there yet with ESG. Most people are talking about it though, right? So they're measuring their social media. They're starting to report on diversity. They're having to report on slave labour, that sort of thing. So they're doing it, but they need better education. And that's why I'm so glad to be talking to you. I've done this probably 15 times over the last 12 months to my clients about getting them up the curve on ESG. And this is the education point. There's going to be increased regulatory, legal activity that we're seeing that. ASIC is our regulator. The Australian Securities Investments Commission, which is the stock exchange oversight effectively. They really are cracking down on greenwashing and bluewashing. Our government is looking at it because there's votes for them. And consumer choices have changed. I remember people are starting to buy things that are more green, buy things that are more blue, and changes in reporting requirements, pressure up and down the supply chains. You know, Grant Thornton, I was only asked a week ago with one of my audit clients to provide more information on what we're doing from an ESG perspective so that they can put it into their reporting. I'm their auditor. That seems strange, doesn't it? But we're seeing more and more on that. Carbon reduction targets, well, that's a global thing we're seeing. And transparency. And this is where auditors are going to get busy as well, as I mentioned before. S1 and S2, just to let you know, in Australia, it's not mandated. I'm sorry, I've got Aussie dollars here. I haven't, maybe I could have converted to US dollars or to your currency, but it gives you an idea. The disclosures under IFRS S1 and S2 start financial year 2025. So we're going into 30 June 2024 as our financial year. So this will be 30 June 2025. So we're only a year and a half away from organisations with over 500 employees, over $1 billion in gross assets, and over 500 million. It's actually two of them. So if you've got 500 employees and you're $1 billion in assets, you'll need to report IFRS 1 and S2. And then 2 years later, group 2, you can see there in group 3. So we're not implementing this straight away. And the implementation is not going to require assurance straight away as well. So, you know, it's being brought in. I put a point there, just talking to Ron, that the Cambodian accounting regulators, you do follow IFRS, obviously, for the adoption of the new standards, unless you delay it. In fact, in Australia, we have said that our not-for-profit sector will be scoped out of this initially, even if they meet these sides. So I'm not sure what you're going to be doing. Maybe you'll be close to that, of course, what's happening in Cambodia. What does IFRS S1 require? It seems simple, doesn't it? What's the reporting entity? So here's the challenge. You're a parent entity in Cambodia. You've got subsidiaries offshore. Are you reporting your local S1, S2 information in this case? Are you reporting the global impact? You might be a subsidiary of an offshore entity that's asking you for the information. So what is the reporting entity? And there's questions about joint ventures and, 20% ownership, that sort of thing. So in Australia, we have the concept, they try and have it around they don't want all of it reported so that it's double the amount of actual carbon. They'd like to get the right amount of carbon produced by entities in Australia. So this has caused a bit of challenge around joint ventures and things like that. So you'll need to really carefully consider just what is the reporting entity. 9 times out of 10, that'll be quite easy. You have to identify the sustainability related risks.
ទី2គឺត្រូវកំណត់នៅនឹងនិរន្តរភាពដែលពាក់ព័ន្ធហានិភ័យនឹងឱកាស
Sustainability is more than just carbon. Sustainability is around
បាទនិរន្តរភាពគឺវាលើសពីកាបូនពាក់ព័ន្ធទៅនឹងសង្គមពាក់ព័ន្ធទៅនឹងបុគ្គលដែលពាក់ព័ន្ធនៅក្នុងភាព
Sustainable. So it's an extreme, I know, but that's the sort of thing that sustainability is beyond the E. You have to identify what the risks and opportunities are. You have to identify what's the material information about them. I don't want to know everything about your sustainability issues. I only want what's material, and that's what's important. I talk to my clients about having 6 to 8 key reporting type indicators. A bit later on, I'll talk about what some of those might be. Not 200 indicators, right? There's only 6 to 8 that might be material through who you assess are the stakeholders. And then you have to disclose that material information about all the identified sustainability risks and opportunities. So this is S1 at high level. S2, remember before I talked about scope 1 and 3 disclosures, scope 1 being what you create, scope 2 what you use in your process, scope 3 is the downstream carbon use impact that you have. That's your greenhouse gas emissions. Electricity gets converted to greenhouse gas emissions. So you get the specialists coming to do that for you. What is the approach used in measuring those emissions? You'll need to disclose that. How's the transition? What is the amount, percentage of assets and business activities that is vulnerable to the risks? I'm a banking specialist. You know, have you lent money on mortgages into flood-prone areas? That's exposed to climate risk. I do a lot of work in the insurance industry. Again, have they providing insurance into flood-prone areas or bushfire areas, as an example? As a bank, have I lent to a big corporate that is emitting a lot of carbon and is going to a lot of money to reduce the carbon impact? So you've got to determine just what the physical risks are to you of climate change. S2, remember, is climate. What are the opportunities? Manner and percentage of opportunities of business activities aligned to the opportunities. Maybe we're a more green user of electricity than our competitors. I had a good client of mine. They're in the health space and they use radioactive material to cure cancer and to work, you know, try and overcome cancerous issues. And they were asking me, Darren, we'd like to report that we use half the radioactive material that our competitors do. I said, well, you can't disclose that. You can't say you use half. How do I know you use half? Have you assessed what everybody else uses? Maybe you can say that you now use half, have half the radioactive waste that you did 4 years ago, and you're trending in a direction that is better and you're achieving the same outcomes or better outcomes. That's disclosable. So this is the opportunity they can see. They can actually start seeing the marketing, how good their product is in this regard. So what are the assets and business activities deployed to these risks and opportunities? What are you doing to actually manage these risks? What are you doing to actually see the opportunities? The price and how carbon is priced internally for decision-making purposes. So what are you pricing carbon? Those of you know Australia, Tasmania is an island off the southern Australia, it's part of Australia, but it's an island off the mainland of Australia. All their energy there is largely generated from water. So, you know, there's a pricing issue and advantage for them that they should be disclosing, those organisations that use Tasmanian energy and electricity. And then, of course, remuneration. How much remuneration is linked to climate considerations? So a lot of organisations are actually paying people to say, you know, if you come up with better ideas, and if we reduce our carbon, you actually will get a bigger bonus or you'll earn more. So that's another challenging one to report. I've applied this. I use the 4-pillar framework. Again, largely what we've said, but what they're looking for is under IFRS 2, how are these disclosures, how is your organisation governed? So is it the board's responsibility for climate-related disclosures of its risks? Is it the board? Have you got senior executives? Have you got an executive general manager reporting directly to the board responsible for this? Disclose that. Do they have the right skills and the competency? Do your boards have the right skills? That's a challenge these days. A lot of boards don't have this specialisation. It's relatively new. Who is the responsible body within your organisation for overseeing? Now, how are you monitoring your progress? Are you reporting it monthly, every year? It's around the climate disclosures. I've been doing quite a bit of work supporting my clients in strategy. So, you know, they develop the strategy. Are they considering ESG, sustainability, in their own strategy? What could happen if they don't follow ESG best practice? You know, what could that do? What's the impact? What are the targets that they have? And this is what S2 is asking you to provide. What's the risk management? You've got larger, I talked about some of this before, you know, what processes and controls do you have in place? You're going to have to disclose this in the accounts once S2 is in place. What are the monitoring of risks? What are the opportunities? And then there's some metrics and targets. And I talked about 6, 8, I don't know, 10, 20, it's your business, right? What's across the industry? What are the metrics? What are the climate related targets you're aiming for? What is the classifications of your greenhouse gas emissions? You know, are you using less? Are you using more? Is it accurate? So these are the things under the 4-pillar framework: governance, strategy, risk management, metrics and targets you're going to have to start disclosing. And there are thoughts that need to be considered through that. I mentioned before, I'm a specialist in banking finance. I do a lot of work in fact, tomorrow night I'm presenting to a board in the aged care space. So around ESG, and I thought I might use this health sector as an example. So I'm be talking to them. I think it drops it down for you to understand what are their stakeholders. And you can apply this to a lot of industries. You know, residents, clients, the families, employees, governance, higher bodies, local communities. A lot of people are invested in stakeholders in the health industry. They've got to consider who they are before they can really think about what they need to report. And then I went through the E and the S and the G. So, you know, how much energy do they use? Building grounds, maintenance, how much waste do they have coming out of this? How much water they use? How do they buy in a sustainable way? How do they transport people to and from their facilities, within their facilities, off to hospitals, that sort of thing? Where do they buy their uniforms from? We talked about slave labour and offshoring around the uniforms that they bought offshore. The bedding must be used a lot. Where does that source? How's it cleaned? So you can see the E in the ESG is not just about carbon, but all of that has carbon impact. Energy consumption, obviously, building and grounds maintenance, how much do they use in tractors and graders and that sort of thing. Procurement, electricity around transportation is all E around and all carbon from an S2 perspective. Then I'm going to talk to them about the S, access to healthcare. Are they diverse in their staff and their board members? How much do they contribute back to the community? Do they innovate? You know, that's another thing that would be good to report. What's their safety and welfare? Do they train their employees and their staff? What are their conditions like for their staff? Are they ethical? Health and nutrition, providing food to their people that stay in their facilities. Again, there's a lot of S that they can talk about and that they do really well. And how well are they governed? Obviously, cybercrime is a huge issue at the moment. If I'm wanting to invest in this company, I'd like to know that they're being managed properly from a data security and privacy perspective. Are they reporting all the information they need to their regulators? Are they complying with the Modern Slavery Act, which I've been referring to a bit? Are they financially transparent? What are their structures? Do they have an audit committee? Do they have a risk committee? How are they governed? How do they use the funding that government give them? So there's 6 areas of governance under ESG that they could be reporting. So some of the considerations, the role of choice. You have a lot of choice. You know, you get to make the choice as to how you disclose this information. Is ESG strategically aligned? I'm saying, please don't see S1 and S2 as an impost by the regulator or by IFRS, right? Use this as a positive to get you up that curve because it adds to your financial value for your corporates. How's it communicated? And it gets your employees organised in it as well. They like to be in it. The younger people these days love to think they're part of a carbon better world and they're doing something to help. So bring them on board. Focus on the employees around the focus. They will want to work on this. I'm talking to my corporates about where they sit on the journey. I don't want to spend too much time on that, but I would like to see most of my clients up there on the right-hand side. It's embedded. They're sustainable. It's part of their strategy. That's what they talk about. They're not down here around this awareness and unstructured thought. I'd like to think most of Australia is in that middle, development of initial ESG and sustainable strategy. S1 and S2 is going to help them with that. This is your all accountants, and you're talking to your clients. You've got your own organisations. How would I suggest you go about this? Have a workshop. Undertake the materiality assessment that we talked about. Remember the dual materiality, just what's important to your stakeholders. Develop a response. They've already got a lot of information that they're producing, these companies already. What framework are you going to start reporting? Remember I talked about the GRI, the UN sustainability standards. I talked about the climate change initiative. This is the first, this is S2. So which framework are you going to start reporting under? How do you collect the data? Is it accurate data? How do you execute on that? You know, bring it to life within the organization. Use it to tell your story. Get ahead of understanding where the gaps are, identify the opportunities, turn it into a positive, and mitigate the risks too. That's largely what this is all about. What are the opportunities? Short term, together, make it coherent, make it succinct. What are the 3 pillars of ESG interact with your values of the strategic plan? Remember, environmental, social, and governance are being reported on. Make it a strong position in race. I've been talking to my smaller banks. You know, the fact that they don't use much carbon is a positive. Start reporting that they don't. It's not about what you have to report because you're a big carbon emitter. You report that you're not a carbon emitter is a good story to tell. Build that into your operations. These slides will come to you as well. Just things to consider. This is a bit of a checklist for you. So you know, some higher level considerations in the health and aged care. What can you do? Set realistic strategic ambitions. How are you going to deliver in a sustainable way? What are the market and ethical trends? What's happening with public relations? This is the I'm not going to go through them all, but this, if you are looking into your clients who had health and aged care, you could actually go to this table and pick out some of these. I've just manage risk and reputation. There's the G. Data security. How well are you managing that? How well do you manage your reputational risk? There's some good, I think, some good ideas for you to start that journey, which is this. Remember I said have an initial workshop. You could use something like these tables. Financial services, I'm a specialist, as I said. You know, access to the right talent. You know, isn't that a good information to provide? How many PhDs do I have? How many doctors do I have in the organization? Maybe that's something that's worth reporting. Do I have responsible selling practices? How do I manage access to people and talent? Report that if you think that meets the requirements or the needs of the stakeholders. So again, this is something you can use as a bit of a checklist. I was asked, Ron suggested that I put to you just some examples of what's happening in the financial services. I've talked about healthcare already. I pulled these out. So a very large bank in Australia reports the following 6 things as really important to them. How much money do they invest and provide back into the community? How many people have they recruited from underrepresented groups? How many women do they have in their leadership? How many people do they think belong in the bank? Their reductions in scope 1 and 2 emissions, as I mentioned, since 2015. So they don't compare themselves to others. They just say, we have reduced emissions by this amount. And they make the statement they're carbon neutral. This is a big bank, right? There's one of the big 4 banks in Australia, and they're only reporting 6 things that they think are really critical. They're not, it's a long report. It is 200 pages, but the highlights are these things. So these are what they are seeing as material. Another client of mine is a large leasing company. So obviously it's all important. How many salary packages, leasing packages do they have? How many leases in vehicles do they actually have? How many clients' funds do they manage? How many donations and sponsorships? That's linked up to that community investment that they make back to the community. Again, scope 1 and 2 emissions. See how that scope 1 and 2 is actually down the curve or down the ladder of reporting for them. Other things are more important in that ESG reporting space. And again, at the bottom, it's really important to them. They actually show how many women in leadership they have on the board, at the exec table. So there's, again, just 6 critical things that these organizations have determined are important to report. One line there is around that scope 1 and 2, which is the S2 criteria. And Ron actually mentioned to you that a lot of you have manufacturing considerations too. So when you're thinking about your S1 and your S2, how you're going to report S2, don't just go down the reporting framework. Think about ESG and how you might gather some of this information and find the 6, 8, 10 things that you might think are important in that organization to the stakeholders that you have and what they might need. And that'll help you with your reporting. That's my presentation. I hope you found that interesting and useful. And now there's time, I believe, for questions.
Thank you, Darren. Yeah, there are some questions that came about. Let me just pull that up. Hang on. All right. Chandapi, can I share my screen so that we can show the questions to the audience? I'll try to do that now. All right. Are you able to see my screen, Darren?
Yes, I can. Yes.
All right. So we have about 11 questions here as of now. Let's take a look at them. The first question is, do you think the company will be required to have this ESG audited as part of a financial audit?
Definitely. It's going to take a little time for that to happen. I think initially this information will be reported and presented. I think boards will start to ask for some certainty around the information that's been provided, so that they're not at risk of greenwashing and blue washing being issues from the regulators or lawyers and investors asking those questions. So yes, and the auditing standards, global standards, are coming out as to how to audit this. The question there is, what sort of audit opinion is given? Is it a negative opinion or is it a full assurance opinion? I think initially it'll be negative. Nothing's come to my attention that says that it's wrong. I think ultimately though it will become full assurance, and it won't be a financial audit. It will be an audit of the reporting of IFRS's financial and under the S standards as well.
Right, and to your point, the Cambodia accounting community regulators have really adopted the full IFRS, so we are expecting this to be in line with that adoption unless something changes. Okay. All right. The second question is, what should companies start doing now to be able to comply with the 2 new sustainability standards, 1 and 2?
Yeah, good question. And this is the point about, I think all companies should be thinking about ESG and having S2 as a component of those considerations. So they should be starting to gather how much carbon they are using today. And the good thing then, when it's mandated that needs to be reported, they'll be able to say, you know, from 2023, when we use so much carbon, we've now halved our carbon use, or because we've undertaken this, or we see the opportunities of. So they've actually got a historic data. I know that when the new standard comes on board, though, you won't have to disclose historical data if you haven't got it. But I think it's a good message personally. And I would like to think that S2, for example, is part of a bigger ESG consideration by these organizations.
Right. And to that effect, Darren, do you think that, so we were suggesting to start measuring or getting data on carbon emissions. Do we need specialized people to be able to do that, or do we need to invest in special equipment to be able to do that? Or?
Not special equipment. I think you'll find that a large manufacturing corporates already know how much energy they use in the process for their smelting or their manufacturing. You'll find that a bank with lots of branches obviously is buying electricity from electricity suppliers. Those suppliers will give monthly statements as to how much electricity is being used. That electricity is then converted to carbon. So you'll actually need to be starting to ask from your electricity suppliers where that electricity comes from. Does it come from wind turbines? Does it come from hydrogen? Does it come from brown coal? So you'll need to start, and experts and specialists will come in and take that information using tables provided by governments quite often around how you convert. For example, if you've got a fleet of 20,000, 1,000 cars in your organisation, there will be four-wheel drives, there'll be tiny little cars, there'll be electric cars, there'll be all sorts of vehicles in that. You don't have to go and measure all 1,000 cars, how much they travel and how much petrol they use. There'll be a table that says if you've got 1,000 cars, on average, when they travel this far, this is the impact of carbon. So you'll get some tables that will help you with that calculation, but experts provide that for you.
Okay, so taking that into the context of Cambodia, Darren, most of our people here are driving motorcycles.
Right.
And a mixture of motorcycles and cars. Of course, there are gas emissions. I don't think the petrol station would be able to supply that, but this, and they own the motorcycles, obviously, and they own their own cars. So for purposes of starting to get the carbon emission data, what would be a good starting point?
And that'll be a survey of those employees to ask them how they get to and from work, and do they use their vehicle for their work. And then that survey can be used to gather the S3 information, not S3, but the down the chain, the third level of reporting under the carbon usage.
This refers to the group 1 and 2 and 3 that you mentioned. They're asking who defined those groups. I think they're referring to the number of the people and the
Australian government.
The Australian government.
The government endorses our IFRS standards, and the government will say you are going to bring in IFRS 1 and 2 and corporations with the following criteria. These are the deadlines you need to bring that reporting in.
That is what you mentioned, that everyone is not phased in. It's a gradual phasing.
That's right. That's right. And at this stage, our not-for-profits are being told you don't have to bring that information in. They will all start reporting it though, because when one does it and people are comparing where they'd like to donate their money, I'm sure they'd like to see that they're putting their money into a carbon better organisation than another.
Okay. I'm just typing in your answer so that the audience will remember. Hang on. Number 4. Sorry. I'm not sure if this question is related to cash management, but the question is how to handle good cash management in a company. I think in the context of complying with the sustainability standards.
I think so too, yeah. And on the face it, you would say, why am I doing this? This is going to cost me money. It's going to be, why am I having to gather this data and pay a specialist to get the information? I understand that as well, but I'm trying to say that this is important for the sustainability of the company, that they start to provide this information, because your stakeholders, employees, customers, investors will go away from your company if you're not providing this information. That's the argument. It is going to cost money. Remember when SOC 1 and SOC 2, Sarbanes-Oxley, came in from the US, measures Sarbanes and Oxley said it's only going to cost $100,000 per company. It costs millions, right? So I'm not saying this is going to be cheap, but it's going to be free. I'm arguing that if you do it in a proper way, that you can actually build it into your strategy, and it will help you in the long run because you're differentiating yourself from other like companies in your industry.
Right. I think that's very important. Yeah. So the possible effect on your customers, suppliers, and investors if you're not in good compliance.
Yes. Yes. Yeah.
Question number 5, I think, is closely related. How to mitigate risk and manage the funding expense by partners. I think the partners that will help you comply with the ESG standard, sustainability standards.
I'm not sure what that means.
Mitigate risk and manage the
is this an
funding
investor into your organization? Is this a question of upstream investment into your organization? At this stage, we're saying it's only, you have to define the entity. That's not going upstream. So it's just downstream and your own business itself.
Right. I think it's a bit too general, but I think in the first part of the question on how to mitigate risk, you should start now getting the data, as in the information that you.
And I think you should be anyway without S1 and S2.
Right. Yeah. How do you showcase that the company is taking climate action in the financial reports?
So again, I mentioned I'm banking and finance. So in the financial statements under IFRS, you are to disclose the key risks of the organization. They're typically the finance risks. So there's market risk, interest rate risk, pricing risk. I think there'll be a fifth risk, and that is climate change risk, because in a bank, if you're investing into entities that are at risk because of climate change, you should be disclosing this. Or don't put it in the financial report, but put it into the front page of the report and start saying, here's what we're doing around climate in our organization. In Australia, a lot of organizations have a separate sustainability report, so it's actually not in the financial statements. I can see it coming together. So you're starting to report it in the one place, and that's the realization that climate change has a financial risk. Mightn't be today, it could be in 5 years' time if you get the strategy wrong or the investment wrong, or you're investing in something that has a risk of climate change. You should be disclosing that in the risk section.
You mentioned that these disclosures are generally separate from the audited financial statements. It's very important to clarify that it's not part of the financial statements, meaning the balance sheet, income statement, and all that standard statements.
I think what's going to happen is it'll be on a company's website, so it'll be almost reporting quarterly or half yearly on the impact of ESG. I think that's what's going to happen, rather than a once off in the financial statements or that reporting. I think you'll see it starting to become a blend, and it'll be online and it'll be fairly real time.
All right. Going back to question number 3, Darren, when you have the groups 1, 2, and 3, are these all annual reporting?
Yes, they are. Yes, they are. Thank you.
Okay. Question number 7, how to disclose in financial statements? I think you've just answered that now.
Although I know you asked me that question before, I haven't seen disclosure yet around S1 and S2. People haven't adopted S1 and S2 yet, so you'll have to monitor that of some examples, because they're not provided in S1 or S2. I think that's very deliberate, because every industry is so different, aren't they?
Right.
Yeah.
And to your point earlier, Darren, even if you've identified a lot of these environmental risks, you're not to disclose all of them, only those that are key to your company, right?
Exactly. What are a risk?
They're the risk.
But my point too, I like to take it broader. Sometimes you can actually say, we don't have a big impact on carbon. I think that's a good thing to report. So a lot of companies are saying it's not what you are bad at, but what you are good at as well. It's quite a challenge there.
So I'm gonna take a bold step here, assuming, because this is a seminar from KIPA, so I think most of the 200 plus people who are tuned in are accountants, and I would guess that they're either working for an accounting firm, no? So in an accounting firm, is it really correct to put that statement that we don't have much impact on carbon emissions?
So Grant Thornton Australia is developing up our own statement around ESG and sustainability, and that was that survey that I mentioned that we asked of our employees. So we will be disclosing on our website, probably in an annual sustainability report, what our carbon impact is. So even as an accounting firm, you know, we have IT systems, we have people that fly interstate, we have people that fly overseas. The level 3 disclosures around carbon, how do our employees get to and from work will be disclosed. So yes, we'll definitely be disclosing that in a report, along with diversity, along with our slave labour, along with our waste, all that sort of thing is going to go in there as well.
And just a little bit more on this one. Is this the same as a transparency report?
Yes, quite often. Very often.
Quite often as part of that one. Okay. Because we see some of the companies doing their transparency report, but again, it touches on many things, but now with the standards being up, I think it has to be in line with what the standards are required.
A lot of companies doing that already. Yes.
Very good, very good. Can we early adopt these standards?
Yes, you can. Absolutely.
Yeah. Yeah. And I think, yeah, it's provided for in the standards.
I assume Cambodian Parliament will allow you to adopt it.
Right. Well,
Australia certainly can. Yeah.
All right. So yes. From my understanding, IFRS S1 will be implemented from January 2024. Can you please confirm? Yes, that's in the standard.
Yeah.
Regardless of the implementation period, can you please share how the company prepares for upcoming requirement? Shall we explicitly disclose the expenses in relation to ESG in the accounts, or just provide a section on ESG in the report?
So the company prepares that information by what they're doing is going to external providers to, as I mentioned, gather the data, help them gather the invoices of electricity. They're doing surveys of their staff members. Internally, they're looking at what the risks are in their business that arise from climate change. So they're doing it there's a lot of work. They've created a sustainability officer, typically. In fact, in an hour's time, I've got a call with one of my main bank clients because asking, you know, just where they're at with their sustainability data gathering and reporting. So they've created people within the finance team largely to gather this information. So that's in relation to ESG. I think the S2 data that they're gathering has to be more detailed, and that's the energy electricity invoices. The expense, I think, in relation to ESG, I'm not sure, is that the cost of gathering the data, or is it the actual ESG that they're reporting? So you'll find that in their sustainability report. You might find it in the front page of their financial statements, but not in the financial statements itself.
Now, just more on question 9. I know that most of the these are corporate and companies in Cambodia, normally has a compliance officer. Is this part of the or should this be part of the mandate of a compliance officer? Like getting this data, having the survey?
What I'm seeing is that quite often in the smaller companies, it's the board looks around the table at the executives and says, "Oh, we'd like the CFO to do it," or it could be the head of risk. Or in fact, it could be somebody that has a particular interest in it. So I'm not seeing it really under anybody. I don't think compliance would be the right person, because this is more about identifying risk rather than are you complying with current rules and regulations. Maybe that person can assess whether the reporting requirements are being met under S2. So I'm not seeing it under compliance. I'm typically seeing it under the CFO.
Under CFO.
Yeah.
As you said earlier, because accountants do a good job of measuring things.
That's right.
Maybe that's because
we're supposed to.
Okay. All right. Question 10, what should the company do regarding ESG for its investment in different geographies?
Yeah, another good question. Remember I mentioned what is the entity that you're reporting on? So, you know, quite often you'd be gathering data. I mentioned my main bank client that I had many years ago, they were gathering their whole carbon footprint right across the globe. So they were gathering that information. Your regulator in Cambodia might only want the carbon impact in Cambodia of your business. So it's going to depend on what is needed to be reported and what they're reporting. I would argue that from an ESG perspective, I'm investing in your corporation. It's the global impact that you're making in that corporation that I want to compare with. Are you doing the right thing? You know, are you employing the right people? Are you giving access to people that wouldn't otherwise have access? Are you making donations in other countries? All that sort of thing, I think, should be reported in your ESG because that's the organization that you are.
All right. Question 11. What should a company do regarding ESG? I think this is
materiality comes into this as well, you know. So if the main business is in Cambodia and you're finding that you only have 5% of your business in another country, that may well not be material to the reporting needs. So you'll have to make that assessment. If you're investing, I don't know, in the US or in Australia, you'll be able to get that data. Those corporations will be able to get it. Goodness me, with economic downturns, global conflict, it's going to make it difficult. And I fully agree. It's going to be difficult to have this information as fully accurate, isn't it? You know, how do you know it's accurate? That's the challenge.
I guess going forward, when there's enough usage of the standards, we'll get more examples, and then we can refine the way that we measure our carbon emissions.
Yes.
But for now, whatever we can do to comply with the standards, we should start with our own companies and try to comply. Question 12. Is there any guideline on the carbon emission measurement chart for the type of usage?
The UK, I know the government there provides measurement charts. They are only relevant to the UK though, and I think parts of Europe. In Australia, we have some guidelines. Again, I think they're probably only relevant to Australian conditions and use. I mentioned before, you know, 33% of our energy comes from renewable sources. So all of them are very different. So I don't know if the Cambodian government is providing these tables. You'll get the regulator for energy will often provide tables that are access to the public that you can use.
I think in the next couple of months, we will be expecting more guidance from the Cambodian regulators towards how to comply with the standards. Good. Because it's going to be starting January 1, 2024.
And it may be that the service providers that help you do the calculations have access to this information. That's what they do. They may even have their own database that you can apply.
Yes, not the supplier. So suppliers. Question 13. For banking and financial services institutions, is it required to report the ESG or sustainability-related issues on banking and financial service activities like lending, non-lending transactions?
Absolutely. Yes. S2 will be very important to the banks because they are typically lending into that space. So there are risks arising from climate change. They're having to report on how much carbon they use, as I mentioned. So yeah, financial services institutions are heavily impacted by this, even though they're not big iron ore smelters or anything like that. You know, they are still having to report this. If they meet that criteria that I put forward, it'll come to them fairly quickly.
Right. I think it's very important to understand that carbon is not just like smoke and gas. I mean, directly, there may be indirect usage of this one, which needs to be looked at. Yeah.
Banks lend to coal miners, right? So
right, that's true.
They have to disclose that information in the level 3 gas carbon emissions.
Right. Okay. 14. Is the Institute aware of the government roadmap in relation to sustainability reporting? I guess this is a question for KICPA, Darren. May we ask anyone from KICPA? to take on question number 14. The question is the Institute aware of the government roadmap in relation to sustainability reporting? Anyone?
As right now, I'm not sure about this yet, so I will keep this question and ask our top management, and then
Very good.
we will answer to Belinda about that letter. Is that okay? Yeah. So you can go ahead to question 15.
Okay, I just saw someone raise her
Benilda,
hand.
Benilda, yeah.
Benilda, would you like to?
Please kindly wait. We will unmute her. So, Miss Belinda, you can go ahead and share your answers.
Yeah, actually, I just want to share this to everybody. I'm not really sure if the institute is aware, but recently there is already, workshop and awareness presentation made together with a car. Actually, sometime in August, the banking industry, right, the financial industry has done this, checking with all their, all the banks and MFIs to see where or how the readiness of the industry. And also recently, like I think it's just within this month, there is also another workshop with a car on the awareness and the draft roadmap for the sustainability reporting. So I guess we would like to have the institute to help us in trying to get this roadmap and to see where we are from a government's perspective in terms of the reporting. I think I already saw another question here also in in your list, Ron. Sorry if I'm going to step over on this. I also see that on the initial draft, even those reporting on IFRS for SME would be required to do some reporting under IFRS S1
Yes.
and S2.
Correct. Thank you, Benilda. Thank you. And I think that is question 15. For leasing and MFI institutions that are over that 500, but currently applying SME, will they need to disclose? Yes, as Benilda has alluded to. But Darren, would you like to provide further comments on question 15?
It's not related to whether you're an SME or not, really. This is related to whether you're 500 people, over $1 billion, or whatever those numbers were. That's what's relevant. Yeah.
Okay, thank you. 16. Australia is a developed country, and Cambodia is still a developing country. Can we totally apply or benchmark those IFRS S1 and S2 in this country, or just be selective of what is more practical?
Yeah. I don't know the answer to that. I guess S1 and S2 is an international standard, isn't it? It could well be. And Australia, for example, has said that we're going to adopt it not 1 January 2024. We're going to take time to implement that. And not-for-profit organisations won't have to actually disclose that information. So I think that's up to your regulator to determine whether there could be a phased-in approach.
Just like what Australia did, yeah.
Agreed.
Correct. We'll watch out on that space. Okay. Going to question 17, most SME only prepare financial reports and directors' reports only. Are these standards only applicable for those companies that have sustainability reports?
If they meet the criteria, they will have to report that information. That's the huge change, and I see it as the huge opportunity for accountants across the globe to be supporting and providing this information. And that's why remember when I opened, I said accounting is beyond the dollars and cents. Now it's it's more than that. It's what we have to take account of.
Right. Question 18, I think, was answered already. It doesn't matter what standard you use. I think you're going to be required.
Remembering S1 is really the the framework. S2 is specific for carbon. And then you'll have
Yeah.
S3, S4, S5. There's going to be more.
It's going to be more. Yeah, that's what I
Yeah.
heard as well. Question 19, since across the industries, there might be a difference of amount or usage of carbon or its impact or something that impact on the environment, does the new standard has threshold or quantify amount that how much of usage do we need to disclose and not to disclose?
Yeah, that's the whole point, isn't it? You know, you're trying to
Right.
compare one industry or one company to another company. So you disclose how much carbon you emit. If
Yeah.
yours is less than your competitor, that's a good thing. People want to work with you, invest with you, buy from you. If you're more, you might have the government asking you to reduce how much you're emitting. So no, it's not about it's not a up to a certain amount. It's actually how much.
Okay. And I think that's the last question, unless there are others, Chandapi, that have not made it to this list.
So far we haven't got any yet. So 19 is the last question.
All right. And just to allay everyone's fear, assuming that that your company will be disclosing or complying with the sustainability standards, there is, if you've not read the standard, there is a chapter there about transition. It doesn't, although the general rule of any new accounting standard is you have to present comparative financial statements for the first annual reporting under the sustainability standards, under the transition provisions, you're permitted not to disclose a comparative one. So
That's right.
just so that you know. And then, as we mentioned earlier, the sustainability disclosures are separate from the audited financial statements, and therefore you can go ahead and comply with your annual financial statements reporting. But the sustainability reporting standards can happen later, and I think there is a guidance on how late it can be. It can be like as late as 6 months, 9 months, and so on and so forth. It's in the standards as well. Okay, we have question 20. For logistics industries, there are many vehicles in the operations. So how to identify carbon emission and how to report in FS and how to disclose to.
This is going to be a big exercise for logistics industries. How many trucks do you have? How many vehicles do you have? How many motorbike deliveries do you have? You're going to have to work out how many of these you have. There are tables. I'm hoping that you'll be able to identify, but you'll need to disclose that because that's what your business is. And in fact, I can see a time when companies that go electric with their vehicles, people may well want to use them as their delivery or supplier because they are better carbon than a carbon-based trucks and vehicles like that. You know, that's information that people may want to use when they're actually seeking their deliveries. You know, that's the sort of, and what that does is it creates the move towards those more carbon-friendly logistics entities. That's the point of this disclosure.
And just to follow up on this question, Darren, you mentioned earlier that, you know, for people using their vehicles to go to work, you are to start getting data. For that particular aspect, are you asking companies to start looking at the kilometers traveled?
Yes. Type of
Yes.
vehicle.
And the type of the vehicle.
Typically, I think what happened with Grant Thornton was they said in a typical week, how far do you travel to get to and from work? And then they'll say, well, you take 4 weeks leave a year, you know, so that they come up with averages to determine how much energy will be used or carbon will be used. So it's about averages, but you need to ask your employees, for example, how they get to work, what they do in that regard. They might take the train in Melbourne. A lot of employees take the train. So that's even factored in. There still is carbon emission from using a train, but it's less than driving a big 4-wheel drive.
Right. All right. Okay, question 21. What are other considerations in complying to the new standards, like data that is hard to gather?
I can see annual reports coming out where there will be qualifications around the data. When things start to get audited, I think the auditors will start to qualify certain amounts of the data to be able to say, you know what, we only surveyed 25% of the employees. We don't know how the other 75% get to work, as an example, and I can see qualifications coming. I really can.
Okay. Thank you. 22. What are other... Okay, I think it's the same as 21. Yeah, qualifications if you're not able to disclose something right away.
I didn't think the corporates will make disclaimers rather than just the auditor. The corporate may will say, you know, this is the information we've got, you know. But some of it, yeah, carbon, particularly down at that level 3, level 4. Goodness, how you gather that data, level 4 carbon.
Yeah, the indirect emissions.
The indirect impacts is going to be really hard to get that information.
So going into that level 3 and level 4 reporting, Darren, assuming that an auditor were to audit the disclosures, of course, you have to take a look at the results of the survey, you know, how are they summarized and things like that.
Yeah.
Is that correct? I mean,
absolutely.
Yeah,
what
because that's where the disclosures came from. So you have to take a look at the methodology.
Exactly.
Okay.
Was it timely? Was it sent, you know, at the right time? Were the questions accessible to everybody? Were there, you know, all these things will come into that consideration.
Okay. 23, in terms of group reporting, let's say the parent company is disclosed or comply with the standard that you just raised. Is the subsidiary required to do so or no need since the parent does it?
So a 100% owned subsidiary should be included in the reporting of the parent entity. And that's where it gets difficult. What happens in a joint venture situation? In Australia, you know, we have different assessments can be used, you know, so that, you know, 25% equity investment is the 25%. Do you report 25% of the energy used by that investee, or do they report 100%? So there are challenges around that, and that is actually being considered.
Yeah, definitely.
100% owned, you would disclose that. The subsidiary would not have to disclose that information if it's reported up the chain,
because it's reported in the consolidated.
That's right.
But for the parent company to be able to disclose that, it would need some information from the subsidiary.
Absolutely.
I would imagine. So therefore, the subsidiary, I think the context here is if the parent company is outside of Cambodia and the subsidiary is in Cambodia and the parent company is complying with the disclosure standards, what's the effect on the Cambodian subsidiary?
Yes, yeah, that'll be a challenge. But again, I think the premise is how much carbon is being emitted in Cambodia. So they don't want the subsidiary and the parent entity reporting the same information, because then it's doubling the amount. You know, they're trying to get a picture in some ways of how much in total is being emitted.
Okay. Yeah. Okay. Question 24. When will the guideline of the disclosure for Cambodia companies be issued? This will be for annual report for year 2025. Again, what we know right now is since Cambodia is following the ISB standards, these two new sustainability reports are to take effect from January 1, 2024. I'm thinking that it will be for the 2024 year. Okay. Is that consistent with your understanding, Darren? I know, or it's for, I know Australia has, the Australian government has defined that it will be effective 2025. So
yeah, so those guidelines are already available in terms of multiples that can be used to convert electricity to to carbon. They're already out there. The disclosures are what's being required under S1 and S2. So we haven't got much any guidelines of that. Maybe some of the accounting firms might come out with that, but I think the trick will be to S1 and S2 is going to be adopted globally. So you might want to go to offshore entities. You know, what's happening in the UK, in the US, you could actually use what they're disclosing as well.
Mm-hmm. Right. I saw a hand raised from Benilda. Benilda, can I ask you to unmute? If you can
Yep.
unmute.
Yeah, yeah. Just to, to share on this, as I mentioned, I have seen the draft roadmap of the government in terms of the sustainability reporting. It won't, as I seen, it's really a draft, and that's why it's important for us, the institute, to work with ACAR on this one, to see really the final roadmap, and the final requirement and regulations that would come up. But I do believe that there is a delay that would happen, and they similar to Australia, they do it on a different group by group basis, but
Yeah.
it's nothing related to, as I have seen, the roadmap is not related to the number of employees and the number of your revenue. So it is, again, it's difficult to say, right? But we know that the government is working on it.
Yeah, and thank you, Benilda. And I think if the institute were to work, and I believe that the institute is working closely with the accounting regulator, maybe you can mention to them how Australia has started doing it, no? The phasing in, no? It's not a 100% compliance for all companies. They've started with group 1, group 2, and group 3. And maybe that's something that they can consider because the roadmap is still a draft. Gender peak, no? Just for the institute to help voice that concern.
We will keep that feedback.
Right. Okay. And I don't see any question after 25. Maybe others have additional questions.
Just conscious. Is there anybody from the banking industry here?
I think there should be, because there was a question earlier about banks. I am
Because
assuming.
I'm pretty sure that they were invited. The workshop that happened sometime in August, or even in early this month, is actually with the banking industry.
Mm,
So maybe it's nice to hear from them as well on what do they hear from the regulators, right?
yeah, that's a good suggestion, Belinda. And to the participants here, no, let's make this an open dialogue, because these are very new standards. And as Belinda has pointed out, I think the Cambodian regulator has started talking to certain industries, banking in specific. So if there's anyone from the banking industry who would like to share what the regulators are thinking of in regards to your industry on how to comply with the standards, we would like to hear from you. I guess we don't have one yet. But Benilda, to your point, you said that you saw a draft of the roadmap. To
Yep.
whom? To whom is the draft being, like, is it general knowledge, or to a group of
It's a
people?
general knowledge, because I know it was a workshop that has happened on for the financial industry.
Okay. Okay. Okay.
But again, it's because at that point, it's I believe the regulator is just checking the players, right? The readiness in terms of sustainability reporting. So I understand that the NBC have presented their view, and what do they want to achieve in the future, and things like that.
Okay, that's good to know. I think you're starting to engage
Yeah.
the financial statement preparers. That's good. Okay. So Chandapi,
yes, sorry again. Would you like the participant to unmute and get involved in this session, right?
well, I'm just conscious that there's no questions coming in. I'm not sure if some
Okay.
people would like to vocally ask their question, but either or, it's up to them.
Since this is a new topic, so we can if you have any question, and then raise your hand, and then I will unmute the participant to get involved with you right now. They can mute themselves to talk.
If they wish so, yeah.
So again, if you want to share any idea, you can raise your hand up, and then you can start to share your opinions, ideas.
I guess for the banking industry, if it is not clear on how to proceed or what to disclose, our speaker, Darren, has mentioned earlier that there are some UK banks who have started doing this. So maybe you can check on what they are doing there to give you a bird's eye view of what you should be doing here. Again, those are UK specific disclosures. So you don't need to comply strictly, but at least to give you a bird's eye view of what you should be starting to do, what you should be looking at. And then he mentioned also that in Australia, there's also some industries who are starting to disclose this. So you may get some examples from them as well. I think no one has further questions, Chandapi.
So can we go to, so that is the end of a Q&A session.
Yeah, and I guess Chanda, before we go to the next topic, we just wanted to have this webinar again to introduce to you these new standards and to have a general awareness of what they are and what you should be start doing now to be able to comply with them. No, these are the first two sustainability standards. I think my last question to Darren is, do we know what's going to happen in the future, like in 2024, if there will be new sustainability standards in the offing?
I understand that there's discussion about a nature standard. So what is the impact your business is having on water and waste, things like that.
Ooh.
So that's what I'm hearing. I think then too, I mentioned around modern slavery. I wonder if that's going to be, there's talk about that being S4. S5, I'm hearing that it could be something like the business model or integrated reporting that I'd mentioned. So, you know, how is your business, what's the model of your business? How do you make your money, basically, and having that disclosed in the financial statements. So I think that could be 5, but this is, I haven't seen a roadmap of that. That's just my discussions with the IFRS people. I don't know.
All right. Thank you, Darren. And I think, yeah, Chandapi, I think that's the end of the Q&A.
Okay, so once again, thank you, Mr. Darren and Mr. Ronald, also Miss Belinda, for sharing your comprehensive answers to the participant. So I will wrap up our webinar today. So our webinar has come to an end. However, before we end, I would like everyone to open their video camera if you feel comfortable to. Yeah. And then Kickback team, please screenshot.
Hang on, do I need to close my sharing?
Yeah. Please stop sharing the slide.
How do I do that?
On the top of the screen, you see the word stop sharing.
I'm
Like
seeing you share.
just a red dot.
Yeah.
Yeah.
Hang on.